And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the show. My name is Al Gordon, and as always, we're working on your financial freedom. On today's show, I've asked Tyler to come back on the show. Now, you haven't heard from Tyler for, I'm going to say it's been about 3 years. It's been about 3 years since I've had Tyler on the show, and what I want to do is I want to get into what has happened over the last 3 years, because over the last 3 years, we've gone through some significant things, have we not? We went through a pandemic. We went through a change in the presidency. We've gone through periods of inflation. We've gone through periods where prices are rising. We've gone through periods where rental prices were supposed to go down, but they didn't. We went through periods where rental rates, as far as the amount we charge for rent, was supposed to go down, and it didn't. So I would say that a lot has happened in 3 years. So what I need to do is I need to get Tyler onto the show so that we can get caught up. I can reintroduce him to you, and then we can get into the nitty-gritty about the last 3 years, and then we can talk about the future. I think that's a plan for success. So with no further ado, let me bring Tyler onto the show. Tyler, how you doing? Welcome back, my friend. It's good to have you back on the show.
Yes, sir. Hey, Al, I'm doing well. Doing well, thanks. Thanks for having me back. Looking forward to it.
Well, Let's just get into the nitty-gritty. Give me a little bit about who you were prior to becoming a Lifestyles Unlimited member way back in like 2012. What were you doing for a living, and what were you doing for retirement?
Sure. So I've been out of school for 3 or 4 years, got an engineering degree, was working, for a large oil field service company in Texas, and was kind of working the oil fields, predominantly on the upstream, drilling and completion side. And, of course, this was right during the financial crisis, 2008, 9, and 10. And, fortunately for me, I guess, well, like everyone else, of course, suffered a loss in my 401k. I was putting as much money as I could in there at the time because that was, the method that you're supposed to do. And so like everyone else, I watched everything drop by 20, 30, 40%, whatever it was, until it finally bottomed out in March of 2009, I guess. But, just kind of continued to keep my head down, focus on my career, my job, and saving some money and investing, in the stock market within my retirement plan. And fortunately, I had some, at the time it sucked, but I knew that was just the route you had to go. But, I had a friend of mine that said, maybe you should think about an alternative investment strategy. Have you ever thought about real estate? He kind of got me onto this rich dad, poor dad thing, and, not really what kind of kicked it off.
Yeah, I read Robert Kiyosaki's books, Rich Dad, Poor Dad, The Cash Flow Quadrant, some of his other books, and I found them very, very informative. What did you find?
Yeah, exactly. I mean, coming from – so I grew up in rural northeast Montana, very conservative, very much, you save your money, put it into conservative, safe investments. Simple interest is king, that kind of stuff, right? But that's more of a recipe for survival, not thriving. So, that was very much our mentality. And so, reading about all these different strategies, especially when it comes to real estate, which I'd never even thought of course, like everybody, I just think, oh, that's for the Donald Trumps of the world, these big, rich real estate moguls. Never even given it a second thought until I kind of read his book and figured out, oh, well, I could do this. And there's kind of a roadmap, or at least one roadmap on how it could be done. So that really kind of opened up my eyes into an alternative investment strategy.
You know what I found lacking about his books, though, and this is not to pick on Mr. Kiyosaki because I do respect him, but I found that the substance piece, the how to do it piece was somewhat lacking. The support system, it just wasn't there. And I found that if I were to try and replicate what he taught me to do in the books, I would be doing it completely on my own. What was your experience?
Yeah, for sure. It's very high level. I think it really kind of sets the foundation, I suppose, for at least fundamentally how it works, right? You buy distressed properties and then fix them, flip them, increase the value, so on and so forth. And then, he kind of lays out the tax benefits and the cash flow and all that stuff that goes with it. I think it's definitely set for people like me at the time, right, where I had no idea about what real estate investing was. So I think it did a decent job of at least explaining from a 30,000 foot view of, this is how it works. But yeah, to your point, if you're an analytical type B like me, I want to know exactly every detail and every step along the way. And so it didn't quite do that for me. And that's probably why he had the education program roll out alongside it to kind of help get you there. But for us, that just didn't make sense. We went to they had a 3-day kind of a workshop, and it didn't really do anything for us. In fact, it really kind of more put us off because it was very high pressure sales and very, very much in your face. Like, this is how you do it. If you're not doing this, you're an idiot.
How did you find Lifestyles Unlimited?
Internet search. So yeah, when we got back from our experience with the Rich Dad Education, I continued to just do some online research and looked at all these other real estate, gurus that had, books and CDs and whatever else to sell. And we were living in Corpus Christi at the time. So fortunately, I suppose, San Antonio only being a couple hours away, that, when I start typing in, real estate education or real estate investing, Lifestyles, propped up. So I guess I should probably credit it to Google or whatever search engine I was using at the time and their algorithm to actually, put that in the top of the feed for us. And so Lifestyles came up and started working through it. And of course, they had a workshop coming up within, a week or two or whatever it was up in San Antonio. So that's really kind of what started it. Did the workshop, it was really more or less what would you say, a repetition of what we'd already heard through Rich Dad in terms of this is how real estate works, this is how you make money in it. But, what we really liked was that it wasn't a, buy my books, buy my CDs, and it'll tell you how to do it. It was a membership. Like, look, you're going to come into this group, this organization, you're going to have people you can talk to, you're going to have mentors, you're going to have resources, you're going to have people who have all done this before that you can call and talk to. But not only that, you're going to have an investment vehicle that you can get into passively if you want. And that's really kind of what we were looking for. Like we understood that, by owning properties and going through the method, that's really how you made your money. But for us, it was really hard to do with our jobs and knowing that we were going to be moving around. And so the passive investment option really made a lot of sense for us because we continue doing what we're doing, but also invest our money alternatively and grow our wealth that way.
How much seed capital did you start with?
So technically about $100,000. So yeah, we were fortunately enough to where, we both had good jobs. We were saving some money, and we had bought and sold a primary residence and, made some money on that. So we had, enough capital to at least get started. And we knew that, with $100,000, we could, through the Lifestyles model, we could definitely buy a bunch of single family homes. I mean, this was 12 years ago. So the prices for single family homes were a lot less then, but we knew it was still enough to at least get into a couple of passive deals. And so we did 2 passive deals in, I think, March and April of 2012. So we split that $100,000 up between 2, and that's how we got started.
And what did those ultimately do for you? What kind of returns did you get?
Yeah, so they were pretty decent. So the market, of course, was a lot different then than it is now. But, we bought into one property in San Antonio and one in Austin with 2 different lead investors. And we kept them for about 3 years. We sold them middle of 2015, something like that. And they returned, about 200%. So, $100,000 turned into about $300,000. Something like that, and that includes the dividends throughout the 3 years and all that, which of course we never spent. Right, you're getting started, so you're saving all the proceeds to parlay into your next deal, and that's what we did. So that $300,000 went into another deal pretty much immediately after that.
Okay, so let me fast forward you to when we talked about 3 years ago. Where exactly were you in your investing strategy? Were you at a place where you're getting close to retirement? Are you retired now? Where exactly were you in 2020?
Sure. No, we still weren't getting close to retirement, but part of that was, we weren't really focused on yield plays or dividend paying investments, right? I was more picky on my investments, and I was focused more on the leads that the lead investors that I was comfortable with, and the deals that I was going for the big payout at the end and not so much the cash flow along the way. So in terms of retirement or cash flow from a dividend perspective, like we weren't really generating much, and still aren't. We're focusing on, different investments, more, I'll say riskier, but they're just, more of the value play type, trying to build our net worth, not really build our cash flow.
Yeah, that's what I was going to say. So the strategy so far has been to double, triple your money, build up that nest egg, because I'm guessing you've got a target number you're trying to hit. And when you hit that target number, then you're going to adjust from maybe these value plays that are giving you the ability to double, triple your money. And then you'll get into the cash flowing yield plays. And then you'll be on a glide path to getting yourself away from whatever you're doing for a job. Am I even close?
Yeah, that's correct. So I think when we were running the math back in 2012, some of these multifamily passive deals were spitting out 10, 12, 15% in cash flow returns, cash on cash returns, right? And so we thought, well, if I need $120,000, or let's just say $100,000, then I need to have at least $1 million at work spitting that out. And so our goal was like, okay, let's get as fast as we can to $1 million. And then, hopefully we can still maintain that 10, 12, 15%. But anybody in the market, over the last 10 years knows that, 10, 12, 15% type cash flow returns just is really hard, if not impossible, to find these days. So that number has been going down. And so that means our investment allocate, or our investable asset value has had to go up. So that $1 million is now closer to $2 million probably, or 2.5 even.
Based on the rate of return you can get on the cash on cash, correct?
Correct. Yeah. And so that's, but that opens up another interesting theory, right? Is if you're just looking for cash flow, then of course you're going to need a much higher base to work with. But if you factor in, the potential proceeds that if that $100,000 is turning into 200 in 5 years or so, and then, maybe you just take that extra 100 that you just made and use that as your retirement money and keep investing that 100. So there's different ways to think about it and look at it, I suppose.
Where are you at today? So we started with $100,000 almost 11 years ago, maybe 12 years ago. And where are you at today? If you were to liquidate everything today and just go to all cash, what did that $100,000 turn into?
Sure. I'd probably be close to $1.5 million of investable capital. If I could get all my money back today, that'd be about where we would be sitting.
Well, I think that's a pretty awesome result, Tyler, because you took $100,000 and over a period of 11 years, you've turned it into $1.5 million. Now, how many hammers did you lift in order to get that done?
Very few. Yeah. So, with the passive model, of course, it just meant we had to continue with our jobs, which was fine. But with the passive model, of course, it just requires that you do your due diligence up front, make sure you're investing in a lead and a property that makes sense for your strategy, and then, pull the trigger and monitor it monthly.
Yeah, spot on. Hey, when we come back from the break, we're going to get into the future. Stick around.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
Want to continue the conversation inside the community? Follow Lifestyles Unlimited on Facebook. Stay up to date on upcoming events, market trends, member stories, featured podcasts, real estate wisdom, and more. You can even join us a couple times a month as we go live with our case study events right on Facebook from the comfort of your home. Get online and get in the know. Turn listening on the radio into participating in the community. Like and follow Lifestyles Unlimited on Facebook today.
creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the second half of the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon. I'm joined by Tyler, I should say, and together we are working on your financial freedom. So what we're going to do in this segment is we're going to fast forward a little bit. We spent the first half of the show kind of getting caught up with Tyler, understanding what he was doing for investing, understanding what his lifestyle is like. And now what we're going to do is we're going to talk about from here forward. We're going to get into the future. We're going to drag our crystal balls out. And hopefully these things are going to work for both of us, Tyler. And we're going to predict the future. You ready for that?
Mm-hmm. Let's do it.
Okay, so what does your crystal ball say for you regarding when you're going to retire? Do you have a date that's coming into vision in your crystal ball?
I don't, unfortunately. I would say, we would certainly hope within 5 to 10 years if we could, if I could have it my way. Of course, that means all of my current real estate investments have to go full cycle. I need to have that capital returned to me so I can put it into other, more cash flowing type investments. If you figure retirement based on cash flow return. I have, quite a bit of capital it's out there for the next few years. I've still been investing into somewhat, few deals that are more value plays, right? So they're not really going to generate any immediate cash flow returns. But, within 5 years, theoretically, I could have all that, technically all that back, and then figure out what to do from there. But, as I've said previously, we want to have the financial freedom or the option to be able to, quote unquote, retire or do something else if what we're doing today, we're not liking what we're doing today. So it's not like we're focused on it, but it's not our end goal or our end all be all goal. We're just really trying to grow that base as best we can, make the best financial investment decisions we can. And then hopefully, if we get to a point when, we're generating the cash flow that we need, we can decide if we want to hang it up or not. But, if that happens in 5 years or 10 years, I don't know that we're really too focused on that time frame. But we've got a couple small kids too as well. So, we want to bet for their future, but also, hopefully build something that they can take and run with someday too, if they want.
What's in your portfolio right now? How many units do you have?
It's probably about 1,800, something like that. But then that's spread out amongst 10 different investments over probably 6 or 7 states. So over the last year or so, as you know, and as everybody knows, right, like the capital markets have been changing. Interest rates have been going crazy. Taxes and insurance, especially along the Gulf Coast, have been really kind of dipping into the cash flow. And so probably about, a year ago, I started thinking, well, if I really want to get more cash flow going, I probably need to look into maybe the single family market, which seems kind of backwards, right? Like the whole goal is to get to multifamily. But, for us, buying a multifamily complex isn't in the cards right now. And so we start looking into single family for cash flow. But being in Colorado, it's more expensive, and B, the returns are just not as good. So it makes it tough to do it locally. So we've had to look into doing it remotely in other states.
Is Colorado a landlord friendly state?
I think that probably depends on who you talk to. If you read through their laws, I would say it's probably a little more landlord friendly than some would think, but maybe certainly less than others, right? Coming through the COVID meltdown a couple of years ago, when all these rent restrictions and eviction moratoriums were happening, Colorado really didn't suffer that. I mean, they were trying to push stuff up to the governor to get him to sign off and push the stuff through. And he kind of just flat out, to his credit, said, no, we're not going to do that. So, I don't think a lot of that happened here. but again, like I'm not an investor here, so I wasn't really paying a whole lot of attention. But they are trying to push through rent control and maximum fees and all that stuff that you can do. But I think in terms of evictions, it's probably pretty standard, 7 to 30 day type deal, which is not as good as, say Texas or some of those other states. But
so are you okay with investing out of state? I mean, that sounds like it might be a little risky.
As a owner, like own my own properties.
Yeah, for like single family properties, like you're talking about.
Yeah, it's a big leap, and that was really kind of the reason why we didn't want to do it when we started 12 years ago. Was trying to figure out how to manage properties from afar just wasn't really in the cards. And I think as far as lifestyles goes, that education at the time was still kind of in its infancy, but it's definitely got improved since then. So I think there's a lot more tools available to be able to do that. And so for us, actually, we did pull the trigger on a single family, a duplex actually in Missouri a few months ago to kind of dip our toe into that world. And so we're in the early phases of going through that.
Had you considered being a lead investor? Is that something that maybe, shows up on your radar blip?
The hard part for me is, it's always nicer if you can go through that and do that and, and put together a property that you can be close to proximity wise. So we kind of understand that Colorado's tough. It's really expensive and it's kind of hard to make it work, and it requires a lot of capital if you want to get into doing that. And so it was kind of off the table investing here. And so for us, it was like, well, okay, then we're going to have to do this in another state. And so the idea of trying to put together a syndicated deal and manage it from another state that requires probably more attention than a single family property would kind of led us to think that wasn't a viable route. Now, I know there's people that do that. I'm connected with some leads that put deals together in other states, and they went fantastically, right? So they can do it, or they did it. I know it can be done. I think it's more difficult if you have to rely on your full-time W-2 type job simultaneously.
So maybe the single family route, maybe you're onto something, and maybe that's something you pursue full force or not, because it seems to me whichever path you choose to go down, you're going to hit retirement fairly soon. So let's talk about your lifestyle in 2 to 3 years. What do you foresee that lifestyle being when you get to that point where you can go to your employer and say, I don't know if I want to work for you guys anymore?
Mm-hmm. Yeah, I think now so for the previous 10 years, we weren't really too focused on that because it was just my wife and I, and we were focused on our careers, and we were fine with that. Since then, we've had a couple kids. Our oldest just turned 6 yesterday, and we have another small one that'll be a year old here in a month. And so you can definitely appreciate having the time to be able to run around and do all of their little school events, extracurricular sporting events, stuff like that. And so having the income to be able to support that is valuable. And so, in 2 to 3 years, we would be looking at a 3-year-old and a 8-year-old, 9-year-old, something like that. And so they'll kind of be pretty heavy into all that stuff. And it would certainly be nice if I didn't have to, or at least if one of us didn't really have to worry about going to work the 9 to 5 to be able to partake in all of their little events and stuff like that. So having that time, I think, is definitely a consideration and a concern that we want to try to cover in the next couple of years.
So who would retire first, you or the wife?
Well, it'd probably be me, just because.
That's very selfish of you.
Well, the idea was, if we do go down this single family route and really try to forge ahead on focusing on cash flow and retirement, she's been pretty much removed from the whole thing, especially since we had kids. So it would have to be me that would have to focus on it full time. And so the thought would be like, if I could at least replace my income, then I could, quote unquote, retire, focus on that business full time. And then, she could choose to retire whenever she wants at that point. So that was really kind of the only reason for that. It's not like I would retire and then just go take vacations and go hang out on the beach or up in the mountains, right? It was more of a strategy of, continue to grow the business and build that portfolio.
Now, one of the things you do as a part of the Lifestyles Unlimited community is you're one of our ambassadors. You're one of those members in the greater Colorado area that puts on events for the members that live in your area. Give me a little snapshot of what it's like to be an ambassador.
Sure. I really enjoy it personally just because, for the selfish reason for me, it's really kind of forced me to get back into, the education and stay abreast of what's going on within the Lifestyles community as a whole. But also it's allowed me to, help people that were in the same position I was 10 years ago, 12 years ago, trying to figure out does this make sense? And, what is Lifestyles all about? So there's a giving back component, of course, that I enjoy, and I enjoy talking to folks and new members and telling them my story, so like we're doing here. And then, seeing them say, hey, really appreciate it. I've decided to sign up because of our conversation. Great. Reach out to me anytime. We do monthly meetups. Please come and share your story and so on and so forth. And so I enjoy helping people. I enjoy watching them succeed and use, some of the stuff that I've learned, and then along with all the education that Lifestyles provides, put it to work and be successful. So that's been really fun. We've been able to grow our member base here from just a couple to, over 100. The Colorado Springs market has been growing tremendously to the point where we got a new ambassador position down there because they need full-time kind of support. And so there's actually 2 of us here in Colorado now. And
careful. You're going to be like California. You're going to have like 10 ambassadors before you know it.
Yeah. Yeah, I mean, that's the hope. So we're just hopeful that we can continue to help people on the real estate journey, add value to where we can to the Lifestyles organization, and really kind of give back to folks, to members, new members, old members, and whoever wants to learn more.
Yeah, I'm on board with you 100%. Hey, Tyler, I hate to break the news to you, but we're actually at the end of the show. So I've got to say thank you very much for taking time out of your busy schedule to come hang out with us and share your story, share your experiences. I'm pretty confident somebody learned something from you that they would have learned nowhere else. And if you want to learn the way Tyler and I have learned, and you want to become a member, go to lifestylesunlimited.com, sign up for a free workshop, and let's get you going.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.